warm welcome to every single one of you for coming in. And a very interesting session. Obviously, US, green card, the visas, and who better than Mark and Matthew to take this up. So very quickly, what we'll be doing is it's going to be a conversation with Mark and Matthew. They're going to be talking about all the norms and the processes, etc. Very important is please put your questions onto the Zoom chat. Mark will pick it up and he makes it very nice, very informative, very content rich. There are no stupid questions. Please go ahead and make it as interactive and useful as possible. And with that, Mark, over to you and Matthew, and we're all looking forward to this session. Thank you so much for taking time to interact, join, and engage with this wonderful audience that we have here. Thank you very much. Over to you, sir.
Super. Thank you so much. So, we've run a few of these sessions now. So the focus I think we'd like to talk about here is about using EB-5 as a businessman and how that can be a good route to the United States for people, sort of the average Thai member. But there's one thing in the market right now, and Matt's about to strangle me because he doesn't know I'm going to ask him this question, that we're certainly getting a lot of questions from clients in India. And so if you've looked into EB-5 and you're from India, you've probably heard about this. And I think there's a lot of sort of fact and fiction. So Matt, I'd like to ask you about this Baring lawsuit, right? So as recently as today, I had a client from India call and say, I'm ready to invest in EB-5 at $500,000. And then we had a long conversation after that. Can you explain what this is all about? Because anyone in India who's looking into this has probably heard about this at this point.
Sure. This has been something that has really kind of perplexed the marketplace for, I would say, all the extent of this year. There's been articles written about it. There's been a lot of people talking about it. And, back in November of 2019, the USCIS, the United States Citizenship and Immigration Service, the body that governs EB-5, which is a portion of Department of Homeland Security, actually finished a multi-year process to put in new regulations to modernize the EB-5 program. And that included increasing the investment amount from $500,000 as the minimum investment amount up to $900,000 as that new minimum investment. And it did some other things as well, tightened up the areas that qualify for high unemployment areas. And so, it was something that the lawmakers had wanted to do through legislation. They were unable to do that year after year, and so the USCIS took it upon themselves to create new regulations. They put those in motion all the way back in 2017, and they were signed into law and made effective in November of 2019 under an appointed Department of Homeland Security official, and they became the new norm for EB-5 from 2019 onward. Currently, today, those regulations are still in effect. So right now, the minimum investment amount truly is $900,000 US. Baring filed a lawsuit to challenge the validity of those regulations. And they made several arguments. Some of those arguments had to do with whether or not they followed proper administrative procedures and followed the proper notice and comment period and things of that nature. And a lot of those arguments were somewhat ignored or thrown out by the judge who is reviewing this particular suit. But the judge has fixated on one key component in what they've ruled, or not ruled yet, but what they're currently considering is whether or not the official who was appointed by then President Trump and was the head of Department of Homeland Security at the time was lawfully appointed and therefore legally capable of signing those regulations into law. And they've pointed out through numerous, precedent-setting cases and things of that nature that the official at that time was improperly appointed. I think the judge has agreed to a certain extent, or through her, commentary seems to have agreed that that official may not have been properly appointed. And in response to that, Alejandro Mayorkas, the current head of Department of Homeland Security, has ratified those regulations. And why is that important? It's important because a lot of people have looked at those regulations as a Trump-era policy. And right now we have a new president, President Biden, And people have said, oh, Biden must want to throw out all of the policies that were enacted under President Trump. But in fact, these policies, this new regulation was actually constructed under the Obama administration. It was eventually put in under President Trump. But the current administration, the Biden administration, and his current appointee for Department of Homeland Security, Alejandro Mayorkas, have actually ratified those regulations, meaning they agree with those and they believe that they should be current law. And so what it's done is it's put the judge into a position where she is trying to decide ultimately on the validity of those regulations, whether or not they, there's grounds to believe that they were properly signed into effect. And then also whether or not USCIS should have the ability, or DHS in this case, Alejandro Mayorkas, should have the ability to ratify those regulations and keep those regulations effective. And right now we're in a bit of a wait and see period. We're waiting on an official ruling from the judge. There's no additional, action dates set for this case. And so what we may see over these next few weeks, we may see a ruling come out from that judge that will either, validate the regulations put in place, meaning the regs stay as is, 900,000 minimum investment, or they could come out with a new ruling that invalidates those regulations and provides some sort of relief measure for Bering, who is filing the suit and essentially asking the judge to repeal those regs and give them some sort of remedy. We don't know what that will look like. We don't know if they will be immediately repealed. We don't know if there will be a challenge put forth by the U.S. government at that point in time to request a stay, meaning keeping those regulations in place until further rulings or further hearings can be had. So we don't really know at this point in time if there is actually going to be a window between now and June 30th where investors may have the chance to file at that $500,000 investment.
I actually agree. We haven't discussed this before, but I agree with you 100%. And the word that comes to mind is speculation when we talk about this topic. But it seems to me that there's a possibility, and I'm not saying whether it's 1%, 50%, or 99%. I've no idea what the percentage is. But there's some percentage possibility of us having a very small window where there may be a brief return to $500,000. Because I think, if there's going to be a new EB-5 bill coming through, and this happens, it's sure as hellfire they're going to address it in that legislation, right? So it's going to be a short-term window. So if I'm an investor, Matt, and we're now June the 3rd, and we could be talking. How long it takes to put together source of funds on an Indian EB-5 application. So if you were an investor and you wanted to stand any chance at all of availing yourself of that $500,000 window, if it occurs, what would you do?
So here would be my personal advice. If you truly want to pursue EB-5 and you have the ability to make that investment at $900,000, there should be nothing that stops you from moving forward and working with an attorney to start the source of funds process on that entire $900,000. And maybe a little bit of a waiting period between now and June the 30th, keeping in mind that your petition will have to be on file prior to June 30th. It might be a smart play to prepare that source of funds for the full $900,000. Be mentally prepared to move forward at the full $900,000. But at least if you get a chance to move forward at $500,000, that work's already been done. That would be my advice. If you can only move forward at $500,000, it's a different scenario, right? You can still work with an attorney to prepare your source of funds on that $500,000. But keep in mind, you may not actually have that window before June 30th. We really don't know when that ruling will occur or what the ruling will actually look like. And the current reality is that you just have until June 30th. So there's nothing that this judge can do to extend the term of the program. It's not as if she can say, hey, we're going to go back to 500,000, and because these rules were improperly put in place, we want to have a period of time that will exceed June 30th to give regional centers such as Bering the opportunity to raise their investment dollars at 500,000. That's not possible. So keep in mind that you just have until June 30th. If you can only move forward at 500,000, I'd start that process. If you can move forward at 900,000, I'd be prepared to move forward at 900,000 because
Matt,
I
if
don't know if you're
if
going to
I'm
accomplish
interested
this.
in making an EB-5 through CMB regional centers, and let's suppose lightning strikes, and tomorrow the judge comes out with a ruling, and let's suppose we end up with 3 days, right, before USCIS do something at this level. Is CMB equipped to take an investment at $500,000?
We are. And so that's something that we've already prepared for. This actually has worked both ways with CMB. We actually had projects on the market before these regs were implemented where we were raising investment dollars at 500,000. As soon as the regs were implemented, we very quickly changed our docs and we raised investment dollars at 900,000. Our projects qualified no matter what was happening in the regulations. We were very conservative in picking those projects so we knew they would qualify. And likewise, we've prepared our current offerings such that if there's a window of opportunity for an investor to file at 500,000, we want them to be able to take advantage of that opportunity. And so we do have the ability to accept investors at $500,000.
So, what we were thinking of doing as a law firm is, because literally, I mean, it could be as little as hours before the government moved to close that window. So we were thinking of taking clients' investments into our client escrow account, and then basically preparing the petition ready for filing, keeping it in our Chicago office, because we've done before. You can use a local city courier to move things from one point in Chicago to the USCIS lockbox address. So what we were thinking of doing is having the funds in escrow, having the application in our Chicago office. Then if something were to happen, and maybe it's only a 1% chance, but if lightning strikes, then we can send the funds over to CMB. You guys are usually very fast with the receipts and the necessary sort of evidences. That can then be appended to the package very quickly, and we think we can probably file within about 2 hours, depending on the regional center getting back with the necessary receipts. Does that sound realistic to you?
Yeah, I think it's something that could be worked out. We have, like I said, we have the ability with a lot of flexibility built into our documents to accommodate for things like this. There's when you look at how this process works, every investor goes out, and what CMB requires is that we require that you find your own immigration attorney. We don't make you work with any one immigration attorney. Certainly, we've had many clients that have worked with Mark. Mark and his team are fantastic. But what we do is we provide you a template for you and your attorney to file, and that includes all the business aspects of that partnership. It includes your offering documents and all the things that the USCIS would want to see. In this situation, there's very minor things we'd swap out, and we'd update that template. And that's something that we could do ahead of time, Mark. I think that you're bringing up a clever idea there. And it's something that, I think we could make preparations for.
Great. So I don't want to talk about this too much more. We're going to have a webinar on this topic, and anyone who's listening to this and would like to know more about the 500,000 opportunity, reach out to us, and you can certainly join our other webinar. And he's not been invited yet, but Matt will be invited to participate in that one too. So, so there you go. So, but let's leave this alone for a little bit. I just wanted to raise it because it's so topical. And this week, I've just had questions from so many clients about this in India that I thought it was worth flushing it out a little bit so that there's some knowledge in the market. So with that said, Matt, a lot of the people listening to this call are businessmen, a lot of startup in the technology industry. So suppose I have a tech startup in India, and perhaps I'm looking to open a business in America. Perhaps I'm looking to sell my app in America. I just want to expand my business into the United States. So how is it that having a green card can help me? Why is it important to have a green card?
Yeah, first and foremost, it's flexibility of movement. It's fluidity of movement, right? When you have an American green card, you can come and go. You can stay in the U.S. as long as you want. You can live anywhere. You can work anywhere. You're treated like any other American person. The only difference really is that you don't have that U.S. passport as it pertains to having that green card. You can't vote in the elections, but you have all the other rights that any American would have. And so, from a business standpoint, there's kind of no greater freedoms that you can have in terms of an immigration status. There's other temporary immigration status, non-immigrant visas, so to speak. There's other visa categories that are tied specifically to your employment. whether it's you're here and you're sponsored by an employer or you're operating a business, you're going to be tied to those things. You're going to be tied to that employer or tied to that business that you're operating. And a lot of times your ability to remain in the country and prosper is going to be, linked to the success or failure of that endeavor. With EB-5, you get the ability to get that permanent green card. It doesn't go away. It's not something that is going to be linked to, your business. And so what this does is, like I said, it gives you that greatest, to me, the greatest amount of fluidity of movement, flexibility in the decisions that you can make and the opportunities that are available to you. Once you have secured that, you're in. You're just like any other American.
Mm-hmm. So you're from a very successful business family, right? The Hogan family's successful business family. You can describe the family businesses if you want to. I don't even know what they are, all of them. So, but from a perspective of a successful businessman, what sort of things are help and support is available for startup businesses, growing technology businesses in America? Thinking about SBA, thinking about the EIDL program we just saw with COVID. Is it a good step to take my business to America and access what is still the world's largest business market?
Yeah, absolutely. Here, you hit on a couple of them: access to grant funds, access to certain types of loans that are advantageous to new businesses, and then you are bringing your business to the world's largest economy. You're bringing your business to the world's most stable economy. And you're availing it to opportunities that far and away exceed the opportunities of a lot of other places around the world, and that's something that can't be ignored. One other thing that I think is really important, COVID-19 has kind of wreaked havoc on various types of industry sectors around the world, and the U.S. economy is beginning to pull out from that. We're seeing unemployment numbers go down. We're seeing, that even industries that were the most impacted, like hospitality, are inching back towards, some semblance of normalcy in a lot of places in the United States. It's going to be a long time for recovery, but look at the amount of dollars that the U.S. government has poured into that recovery effort. Not every other economy can do that, and that's something that can't be ignored. You look at what happened during COVID, and you look at the government's reaction and the press to fix some of those or provide solutions to some of those ailing businesses. Our government has the ability to do those things. Not every government does. And so you bring your business here, you avail it to those opportunities as well.
I have clients in India who have businesses in America, and they were amazed that, the United States government in the aggregate between the two rounds effectively funded their US payrolls for 6 months. Free money. The US government said, we want to help your business in America succeed. You know what? Because of COVID, we'll pay your payroll for 6 months. I don't know any other country that did that.
Yeah, it's unique. And there are a lot of businesses that have survived because of that. We have done over 75 EB-5 partnerships. And it was very important to us when we looked at the projects that we have that we thought were going to be impacted by COVID-19, in particular in the hospitality sector. It was something that we were after our borrowers on right away. Make sure that you're doing everything possible to maximize the amount of, Paycheck Protection Program funds that you have. Make sure they're being used properly. And the way the U.S. government structured it is if you use those to pay payroll and keep employees on staff, they were grants. They were completely forgivable. And so it's a pretty special thing that was able to be done for some of those businesses.
Let me ask you another question. In your business, really, you're a lender too, right? You manage funds on behalf of EB-5 investors, and then you have very stringent lending criteria to lend to people. So as a lender to businesses, Matt, what would your difference in attitude be to a business looking to raise capital that's run by someone on an L visa who might disappear? Or what would you think about someone who's got a full green card?
Yeah, that's just it. Every time we look at a project, we're looking at the sponsors, we're looking up that chain of ownership to figure out, who personally is going to be impacted by the success or failure of this business. We want to make sure that developers have skin in the game. We want to make sure that they have significant opportunity to succeed, because it's hard to walk away from those opportunities. Now, you're hitting on something that's incredibly important. There are a lot of projects out there, EB-5 and non-EB-5, that might be, sponsored by, or, have guarantors or have guarantees provided by non-U.S. residents, people who are doing business in the United States, but don't really have that, other than the business opportunity in front of them, don't necessarily have a tie to the United States. And number one, as you mentioned, you might have someone just completely disappear if things go south, and that can be a major problem. So a lot of times we are looking for people who have made that leap. They have a green card, they're in the United States, they're operating that business. Maybe they've moved their family to the United States, they have a home, they have an office, a business office in the United States. Those are all things that provide that linkage to the U.S. that are hard for somebody to just walk away from. That is important. It's an important aspect of what we look into. We always talk about it. You might have a guarantee. We talk about it in EB-5 a lot. There are a lot of regional centers that, and this has become an issue in EB-5, more so in years past than currently, but there's a lot of foreign ownership of regional centers. And why that's a problem is because you have some of these regional centers doing projects in the United States. Maybe it's the only project they've ever taken on in the United States. And if it fails, hey, they've got their other business ventures in China or Vietnam or India or wherever else they're operating. But they may just completely walk away and leave all the investors, kind of holding the bag for that. So a lot of times they'll use clever marketing tactics like, hey, we're going to 100% guarantee, return of capital, or we're going to 100%, which is illegal from a USCIS standpoint, by the way. But they'll also do things like, hey, we'll provide a, repayment guarantee of the money that you've, funded from the EB-5 investment. And you have to look at what's actually backing that guarantee. If it's a non-U.S. person or if it's non-U.S. assets, you have to be a little bit worried about, the ability of you as an aspiring U.S. person or the regional center that might be a U.S. entity to go and foreclose on those assets. There's challenges. There's a lot of challenges in doing that. So having a sponsor that's U.S. based, or at least has made that commitment to be a U.S. person, a green card holder, or have other business ventures in the United States, like I said, a home, family, offices in the United States. That's something that can be very important to a creditor when looking at whether or not a borrower is worthy of lending.
So there's clearly excellent reasons to have a green card for a businessman over other types of visas. I would just throw in, in my earlier days of a bigger law firm, we had some experiences with IPOs, and a lot of investors, once you start to get your businesses doing very well, and you start looking at major capital, and you start looking at possibilities of going different things, it becomes a definite advantage to be a quotes US person. And with an L visa, you're not really a US person, at least from a commercial perspective. Immigration might say you are, but from the perspective of someone like Matt, who lends hundreds of millions of dollars, you're not. So worth bearing in mind. So I decided I want to do my EB-5, Matt, and we just talked that you explained that the price is currently $9 lakh US, but there may be, a special red light. We don't really know whether there's going to be a red flashing light sale that might last minutes or something at any point in the next little while. So get ready. But if I want to get ready, if I want to move forwards, then what do I do? What does the process look like? Yeah.
So first things first, you have to look at some of the basics. There's a few different legs to the stool, as we like to say. And every regional center is a little bit different. They're not all created equal. So to me, the first thing that you would want to do is, if you're looking at EB-5, you want to start looking at regional centers and the projects that they're offering. You also want to look at hiring a good, trustworthy, experienced EB-5 immigration attorney, someone who can guide you through that process, who can give you advice on the regional center or the project, or the investment that you're looking at. And then you also want to start thinking about your own personal finances. You want to start thinking about how you're going to make this investment, what funds you're going to use. And this is one of the key components to this. especially from India. We see a lot of particularly high denial rate on people who can't prove or properly prove that their funds came from a lawful source, that they were, clean money, white money, so to speak, that was available for investment, and then also that it was transferred out of their home country and into the United States in a lawful way. So you might want to start working with a chartered accountant or your personal wealth advisors to try and figure out the best course of that. I would do that in conjunction with your immigration attorney, and make sure that your immigration attorney is experienced in that. I can tell you, Mark and his team, it's one of their fortes. They've done this for years in that market. And they know the ins and outs of what works and what doesn't work. And that couldn't be more important. I always say to people, to the US government, EB-5 is a job creation tool. They don't really care about your personal immigration pursuit. They do and they don't, right? But what they want is this to be a prosperous thing for the United States, for it to create jobs in the US economy. But for you to make sure that you get what you want, you got to make sure you play by their playbook. And one of the things that's important to the US government is not only creating the jobs, but making sure that the money coming into the United States can be traced, that it's lawful, and that it was done so in a lawful and proper way. They care about whether or not you're going to break the laws of your home country, because once you're admitted into the United States, hey, if you're going to break the laws in your home country, why wouldn't you break the laws in the US? So those things are important. Jumping back to the regional center, once you've kind of built that team, and once you've kind of already started to identify the regional centers of the projects that you might look at, then you really have to dig in. You have to do due diligence. What's the track record of that regional center? How long have they been in business? Do they have the ability to show you that they've been able to take people full circle through this? Not just that they have their initial project that's been approved, but what have they done over the course of that time period? Have people been able to get 829 petition approval, meaning that final petition approval that proves jobs are created and makes, continues your green card as permanent, removes all the conditions on your green card? And then have they been able to repay investors? All of these things are incredibly important. There are a lot of regional centers out there, even in the market today, they've not been able to do that. They haven't taken people full circle. So how can you trust that they're going to be able to navigate all the challenges of the EB-5 industry, that they're going to adapt to changes and curbs that the USCIS might throw at them by way of policy? Or look at the projects. Are they going to be able to navigate any challenges that the project might go through? How are they going to act if the project starts to go through challenges? Are they going to be proactive? Or are they going to be reactive? Are they going to look out for their investors? Or are they going to step aside and say, hey, not our problem? All of those things are important. Understanding that regional center's history is incredibly important. And then you want to look at that target project, and your attorney can help you do this. Mark's firm is unique, and Mark personally is unique because he also has experience in looking at these from a business perspective. He can tell you what challenges it might go through, what hurdles that are there. And I think that's an important element that someone else can provide you, giving you that kind of third party perspective on what the regional center has assembled there. Is it a good project? Because at the end of the day, you want two things in EB-5. You want to get your green card, you want to get your money back. And both of those things have to be there in your review process for you to get comfortable on the decision that you're going to make.
You're going to kill me for raising this, but that's okay. You can send me anthrax in the post or something. But if I'm starting a business in America and I'm from India, right? One of my options is also direct EB-5. So we definitely have clients who are doing their own business and they do a regional center EB-5 for lots of reasons. But direct EB-5 is also there. Can you explain why about 95%, literally 95% of applicants choose regional center over direct, and what direct is? And given you're with a regional center, can you give us fair thrift as you possibly can to the EB-5 direct program?
Yeah. Mark, you always, when you preface it by, you're going to kill me about this question, it makes me really worry, but actually that's a really good question. And I think people need to understand it, especially with the short window of time that we may have between now and June 30th before we see some sort of change to the program. And we can get to that later. We do think the program's got a long and bright future, and we're going to see it reauthorized and extended in the near future. So we're confident in that. But jumping into your question, look, the vast majority of people that do EB-5 use the regional center program. And the biggest reason why they do that is because the regional center program provides what's as close as possible to a passive investment. It's not a passive investment. You do have to have an active role in the process, but it is as close as you can get to that passive investment. So if you're a business person and you're operating a business in India and you want to pursue EB-5, you can put your trust in a regional center. You can pick a project, you can invest into that, and the regional center and the developer who's building the project, they're responsible for completing all of the job creation. Typically, the regional center is going to be responsible for aggregating all of that information and providing it to you and your immigration attorney. You're going to have a limited role to play. You're not going to have a day in, day out on the ground running the business type of role in most regional center operations. There's other elements that are really important to the regional center program. One is that the regional centers get to measure job creation by using input-output modeling or job creation modeling. We can look at programs that were put out by the US government, and we can look at spending in a specific part of the country on specific industry sectors to forecast the amount of jobs that are going to be created. And we can even look at jobs like indirect and induced jobs. And these are the jobs that are created as an offshoot of spending in a particular industry sector. And what it does is it can balloon the overall job creation in the project. It can help mitigate risk that the overall amount of jobs aren't going to be created for the investors who have chosen to invest into that project. And it can provide, a certain level of comfort for an investor to know that,
I just want to emphasize one thing, and I'm going to count 3 times when I emphasize this, so I know it's only 3 times and it doesn't bore people. But one of the things we see on the direct side, and it's sort of what you're talking about with job creation, is the jobs have to be needed. So it's not just a question of having 10 employees. You've got to prove that they're needed. So economic models, it's pretty simple to prove that the jobs are really needed, right, Matt?
Yeah, exactly. You're building a construction project. You can show from that construction activity the jobs that are created. And, you're picking a project. In most projects, by the way, are done in high unemployment areas, so that investment amount stays at that lower threshold. And so you already know that it's an economically depressed area, and you can count all the jobs that are coming off of that particular project. And as Mark's saying, you know that those are needed jobs. Now let's
compare that to a direct.
Yep, that's what I was going to say. Let's contrast this with the direct program. Sure. The direct program.
By the way, there's lots and lots of questions coming in. We will answer all the questions, but we're going to go through all of this first, and then we'll take the questions. So stay tuned. Sorry, Matt. Yeah. Go ahead.
Well, the direct program, and to contrast it, there's still things that are very similar, right? You have to create 10 new American jobs. You have to fully invest the investment amount, whether it's 1.8 million or 900,000. If it's in a TEA, you can still make that $900,000 investment. But you have to have a different role. You have to be.
By the way, that's the first time I've heard a regional center guy be honest about that, very overtly honest. A lot of regional centers will tell you a pack of lies that if you do your own case, it's 1.8 million. So, tick for Matt here. He's a regional center guy telling you the truth that you can do either 9 lakhs or 1 point. Sorry, go ahead.
Yeah, no, that's right. And I've heard the same thing, Mark. And I always kind of scratch my head at, there's a lot of advantages to using a regional center. You don't have to, blur the facts on that concept. You can do the direct program at 900,000, but let's talk about the challenges associated to it. So you have to have an active ownership role in that business. You have to have a direct nexus between the business and the employees of that business. And this is the biggest challenge. You can't use those forecasting tools. So we can't look at indirect and induced jobs. You have to look at direct job creation. These are people actually employed by your new business. And so you're counting heads. You got to count 10 heads. You've got to be able to show I-9s, W-2s, citizenship papers for these 10 workers. So they have to be lawful American workers. Those jobs have to last for 2 years in order to be considered, full-time jobs. And so you think about, going back to what I said before on, your ability to remain in the United States being tied to the success or failure of your business. If your business is incredibly successful and you can maintain those 10 new full-time jobs, well, then good for you. Likelihood is that you're probably going to be able to get your EB-5 green card. But what I would tell you is if you're only going to put $900,000 into that new business, it's going to be very difficult to have enough operating capital to run that business successfully and maintain your payroll for those 10 full-time jobs for over 2 years. So you're probably going to put more than $900,000 into that investment. I can tell you that right now. The other thing is that how does it fail? Well, if your business isn't as successful as you thought, you might be running it at a negative. You might be running at a negative. You might not be making money on that business. Then you have to consider, do I reduce payroll? Well, you can't, right? You have to have 10 full-time jobs, and you have to maintain those 10 full-time jobs. So you might have to continue to infuse additional capital to supplement your business and keep those people employed in order to keep your immigration status.
But Matt, it's not just about, so we've had a few cases filed by other law firms where exactly what you said happened. They didn't have the money for the jobs. So then the business owner does what you just said. He either borrowed or he invested his own capital in keeping the jobs afloat.
Yeah.
But when they came to do their I-526 or I-829, guess what? The case gets denied. Why? Because the business didn't need the jobs.
Exactly. And so that's an important element to this. You know, if that business can operate on 5 jobs and you're just supplementing it so that you get your green card, the U.S. government's going to recognize that. You know, and so these are the challenges that I think a lot of people face. And I would tell you the biggest one that people face, it is that overall capital investment that's required to do this. And it seems like an attractive thing. And I will tell you, I've spent a lot of time, not as much time as Mark, but I've spent a lot of time traveling in India, meeting with clients from India, and the entrepreneurial spirit is very, very strong in India. And so we see that as Americans. People come here from India, they open small businesses, and they become valuable members of the community. And I think there's a lot of people that say, I can do this on my own. I can go to the United States, I can open my own business, I'll run my own business. But the challenges associated to maintaining that business for EB-5 purposes, and as Mark is saying, making sure that those are needed jobs so that the U.S. government's not going to scrutinize the job creation, it can create a lot of problems for people. So I personally think the regional center, and I'm biased, I will tell you that, but I personally think that the regional center strategy is always going to be the superior strategy for ease and convenience, and for consistency and comfort in that if you're picking a good regional center and a good project, likelihood is you're going to get your green card.
To me, it comes down to risk. And when most clients from India start to think about this, they think about that the risk with the regional centers is higher. And I would respectfully suggest that's wrong. If you're dealing with a project that's properly secured, it's properly structured, they've got a good job creation methodology, I would say the risk is almost certainly going to be lower. What people are confusing is risk and control of the money, right? If you invest the capital in your own business, you have more control of the money. But I can tell you as a law firm, we've never had a failed regional center case. We've absolutely had failed direct cases, and they're all when the business fails. So when you bank your family's green card on your own business, then understand that there's operational risk. And you could be a brilliant businessman. And what is it they say, that you've got to do 7 businesses or something to get the one that really flies? So you could just be on business number 2. You could be a brilliant businessman. You could just be on business number 2. And you're banking your family's future in America on the success of your business. So I think, to me, that's what I say to our clients. If you want to be rock tight and secure, think about the regional center. In addition to whatever business you might be doing, because you can certainly do an E2 visa and an EB-5 consecutively. You can certainly do an L1 and an EB-5 together. Those visas will get L1 or E2 will get you to America much faster than you can be in America. But you can be certain that your family is going to get their green cards and you're going to get access to all of the wonderful business facilities that Matt talked about to support your business. It's easier to get angel funding. Lots of clients we've had from Bangalore have gone to Silicon Valley to look for money and to look for angel capital. It's much easier if you're a green card because it looks like you have a bigger commitment to the United States. So,
yeah, Mark,
sorry, I
interrupted
interrupted you. Go on.
Well, sure. You're touching on something that I think is incredibly important. You may be, just about to get to it, but Mark talked about a number of different visa categories there, and the biggest difference between EB-5 and all those visa categories is the permanence of the EB-5 visa. And I talked about that a second ago. There are other visa categories that can get you to the United States maybe more quickly, but that EB-5, in my opinion, is in an EB-5 investment through a regional center. I think is always going to be your most straightforward, your most risk mitigated chance at receiving that permanent green card and being able to be in the United States with your spouse and your family long term.
So I guess another question that comes up for me is, if I am going to move forward with the regional center program, I'm putting a lot of trust in a regional center and perhaps the lawyer to do very strong due diligence on the project. So Matt, as your regional center, if I invest in one of your projects, how do I know that you've done proper due diligence? How do I know that there's not some conflict of interest that you're trying to push me into your friend's hotel or something? How can I be confident? What expertise do you have in that kind of due diligence and as being an asset manager?
Yeah, that's a great question. So, a couple things I would tell you. So first of all, we've been in business for a long time. We were originally established back in 1997. So I think next month we're going to be celebrating our 24th anniversary in the EB-5 business. We've done over 75 EB-5 investment partnerships. We've worked with over 5,000, or actually now we're about 5,800 clients from over 100 countries worldwide. So we're not focused on any one market. We have a big team. We have about 50 employees. We have our own in-house underwriting team, an in-house finance team that works on these deals day in, day out. We have our own in-house economists. So not only do they look at the job creation, they also look at the risk associated to the job creation. That's something that we think is unique. This isn't a third party that comes in just to give us a study and then walks away. They're here day in, day out, collecting information, telling us if they think there's a red flag in the job creation progression, things of that nature. And so these are all things that we do on a day in, day out basis, but it all starts with project selection. We look at hundreds of projects and we pick the ones that we think are the best suited for EB-5, the projects that we think are most likely to move forward, the ones that we think are most likely to complete the job creation on time and on budget, borrowers that are trustworthy, borrowers that are creditworthy, meaning they've been able to service and repay debt consistently throughout their history. The developer that we're working with on our currently available projects, it's called Hillwood Development. They're the development arm of the Perot family based out of Dallas, Texas. They're an unbelievable developer. They've developed over 160 million square feet of logistics space worldwide. And that's their primary industry sector, industrial logistics buildings. So we're talking about large development or large logistics centers for companies like Amazon. And we look at their strategy. We look at the integrity of their company. We look at how they treat their lenders, how they treat their contractors. All of these things are incredibly important. And then obviously, project by project, we're digging into the finer details on those projects. We're looking at the entitlement documents to make sure everything's been completed. There's not going to be some challenge that stops the project midway through. We're looking at their financing strategy. Who are the banks involved? What leverages do they have? We're looking at the value of those assets. But a lot of the projects that we do with Hillwood are pre-leased, which is fantastic from an investor standpoint. We're building a building for a tenant that's got a long-term lease in place, and a lot of times the parent company of those tenants are guaranteeing the lease payments. And believe me, these are creditworthy tenants. These are top 50 Fortune 500 companies in the project that we currently have available. And so we're looking at that lease. What are the outs and what are the provisions in that lease that could create?
Let's just put it like in raw terms. Suppose that we're comparing a project, let's say one of your warehouses, it's pre-leased to Amazon, and goodness, let's say someone's building, another regional center is building a commercial office space, right? Now, none of the commercial office space is leased before the building opens. We have COVID. Describe why an investor would care about the pre-lease.
Yeah, it's pretty straightforward, right? That there's a revenue stream that's been established. So if you've got a pre-leased logistics facility, 100% of that square footage is leased out, and you've got a commensurate lease payment that's coming in to allow that project to cash flow and hit revenue numbers that can create value from for a sale perspective or a refinancing perspective, you've kind of ironed out your exit strategy, right? You already know that there's value there long term. It's going to be very attractive to a buyer, such as in our case with our projects, a real estate investment trust or a retirement fund that wants to hold those appreciating long term revenue streams. we've kind of already ironed out that exit strategy. When you look at an office building that is maybe partially leased or it's completely speculative, there's a completely different level of due diligence. We've done projects like that and they've been successful, but there's different types of provisions that you would want to have in your loan agreement. You're going to structure that loan agreement differently. And if the regional center is not entirely experienced in doing that, it can be a challenge, because at the end of the day, they complete the project. Hey, that might be great from a job creation perspective, but then they have a whole different strategy moving forward. They got to go out and they got to find tenants. So there's a whole lease up period. And depending on economic conditions, Mark hit the nail on the head. COVID strikes and the office industry or the office space leasing prospects go down tremendously. Everyone's working from home. People don't need the office space. There's a lot of people that believe coming out of COVID that may never recover.
We always point out, something like this to clients, and in COVID, several of our clients have said thank you for stressing pre-lease. But, other people say, well, you just got lucky. You can't foresee COVID. And I say, well, no, we didn't foresee COVID. But it's like you just described. It's very easy to see what the consequences of having a building with no tenants. Same thing happens 9/11, right? New York empties out. Doesn't have to be COVID. Could be anything that happens. Whereas if you've got a fully secured lease, then you know that ultimately your capital is relatively secure because of cash flow into the project, right?
Yeah, and just to kind of add to that, COVID was this, total, what we call a black swan event, something that we haven't seen before. No one knew how to react. No one knew how long it was going to last or what long-term impacts it was going to have. So there's no way to have been truly 100% protected from something like COVID. But going into it, you can look at how these strategies, how the exit strategies might play out, what challenges might be posed. And you can certainly look at, the prospects of that developer and their ability to perform. And I would just tell you, the projects that we've taken on over the last year and a half have all been these types of pre-leased industrial logistics buildings. Mm-hmm. And it's because if we're not learning from COVID, we're idiots. We need to look at these types of projects and provide investors with a certain level of comfort.
My point here is, if you are looking at doing an EB-5 for the regional center model, whatever regional center you're choosing, you should be asking questions just like I'm asking Matt. I'm effectively asking Matt, how are you going to repay me my money? Because when your project completes, are you going to be able to resell it? Well, if you have an empty building with no revenue that has costs, it's going to be a fire sale, right? My asset value is vastly diminished. If I try to refinance it with a bank and I have no tenants, they're going to tell me to get stuffed, because it's just a recipe for disaster for the bank unless the interest rate's really through the roof. So, you need to be asking regional centers, how am I going to get my money back? And they may say, well, we're going to resell it. We're going to refinance it. We're going to, not resell it, sell it or refinance it. Reality is, doing those two things, if you have an empty building, is going to be very difficult to do or at a reasonable price, no matter what the regional center says. So you need to ask the regional center, how are you going to get me my money back? And if it's resale or finance, you still want to know, is the project going to succeed? Are they going to have the cash flows? Is it going to be a profitable business? Because their ability to do that will be extremely jeopardized if it isn't. Fair?
Completely fair. It's interesting you pointed out. These are the exact conversations that our team has with prospective clients every single day. We have 14, 15 people in-house. We have a team of another 4 or 5 outside of the country. And their whole role is to, work individually, one-on-one with clients who have questions just like these. So exactly what Mark's asking me are the same types of questions that our people are prepared to answer.
Right. And a good lawyer is not going to get involved in a financial review of the project. It's beyond the scope of our work. But a good lawyer, for example, Matt raised the pre-lease, a good lawyer is going to have real estate experience. Reading a real estate lease is not something actually a financial advisor is allowed to do. It's the practice of law. It's an area prescribed to the practice of law to give an opinion whether a lease is enforceable or not. If you can get your law firm to give you an opinion letter that they think the lease is enforceable and there turns out to be a problem, guess what? You've got a lawsuit against your, not only against Matt possibly, though unlikely, but you certainly have against your lawyer if he told you that. And You want to make sure your lawyer has malpractice insurance, because if he tells you that and he ends up liable because of it, then make sure that he has an insurer who can pay out. So good lawyers should be asking certain questions. They're not going to ask, Matt, does the financial model make sense? Because that's not a lawyer's job, really, to review that type of information. But, another big one that comes up that still blows my mind is the number of projects that don't even have construction permits. It sounds crazy, but they're going out raising capital too soon in the process. They're saying, give us the money to build a building, and they don't even know they're going to get construction permits, because we've now had two. Once in a while, there's a project where it all gets cancelled and the investors end up it was very awkward. There was one when the pricing went up on EB-5 from 500,000 to 900,000. There was a project where clients had invested at 500,000, and the project had to be cancelled because they couldn't build it, because they couldn't get the construction permits. So that's a big problem for the client, because now we've got an increased investment amount of 900,000. But I want to answer the questions, Matt, but have I not covered something from a businessman, or is there something you think we should talk about?
No, Mark, I think you've nailed it. One thing I would add to what the example you just gave is, we see that all the time, actually. One of the things that we inevitably face is people will shop projects and they'll compare our projects to another regional center's projects. And I always think it's silly when someone gets overly attracted because they have a brand new regional center with no track history, saying, hey, you can earn this great rate of return on this project, or hey, look at my project, it's already pre-approved, so you'll be sure to get a green card approval. And you really have to dig into those types of things. You have to understand, okay, well, if you've got pre-approval, let's still look at the project, right? When was that 924 petition filed? What's changed with the project? Is the project under construction now? Is it moving forward? I think in the example Mark gave, we've seen before where people will go out, they'll get their project pre-approved, but so much has changed in that couple-year period where they're waiting for that pre-approval, that there's been redesign efforts, there might be changes in law that have impacted the project in some way, shape, or form, or there might be entitlement challenges that they hadn't overcome. And they're out there marketing a project saying it's pre-approved, you'll get your green card. But the reality is that the project may not even be moving forward, or maybe moving forward, but in a completely different fashion than what was originally envisioned. So those sorts of things are certainly not, an excuse to avoid having to dig in and do proper due diligence. You should always be doing due diligence.
I'm going to read you this question. It's a little bit more legal, but I know you can answer it. So we'll pretend you work for our law firm and we'll cover you with our malpractice insurance for the next 3 minutes. Hello, I am based in Canada with Canadian citizenship and in my early stages of a tech startup. If I want to pursue EB-5 through a regional center, how long does it take to process the application? I have heard that the country of birth, India, can have a very long wait. Even though I have Canadian citizenship, is that true? Are there any ways to expedite?
Yeah, so it's a question that we get all the time. So the visa chargeability is always going to be based on the country that you were born in. So if you've immigrated to a different country, in this case Canada, we're not going to look at you as a Canadian citizen or a permanent resident of Canada. We're going to look at you I shouldn't say we, but the U.S. government is going to look at you as a person from India if that's where you were born. Why that's important, and Mark touched on it, there's certain countries that have backlog issues. EB-5 has been really, really popular in countries like China, Vietnam, and India for the last several years. China now has a very long visa wait line. India right now is current, meaning that if you get your I-526 petition approved, you are immediately eligible to receive a visa. That could change over time. There's estimates out there that say that there is a bit of a backlog that could exist. We don't really know what that looks like right now. What I would tell you is that, the EB-5 program is going to be receiving a lot of additional visas over the next couple of years as there's overflow from the family-based categories. I think it was projected in the last few days that next year there could be some 21,000 visas available for EB-5, which will help impact that backlog. It'll also help the amount of visas that are given to each individual country. What can expedite it? Well, there are certain conditions in which a person can have their attorney file a petition for expedited processing of that visa. It's very difficult or not of the visa, rather, of the I-526 petition, which can get you in line to receive that visa more quickly. And it's very difficult to do that. I don't think there's many projects out there that offer that expedited processing. And that, a lot of times comes with a misconception that the project is a good project. You still have to look at all of those sorts of things as well. So, let's talk about timeline. Right now, the processing times for I-526 petitions, there's posted processing times. And what I would tell you is that in practice and in reality, I think we're seeing petitions being processed in less than the standard processing times. I think 24 months is a very, very conservative timeline, but I think that we're seeing a lot of 526 petitions processed in that kind of 12 to 24 month window.
Right, let's read this one from somebody in Chennai. Hi, Mark. We are a startup from Chennai and have been selected by OEDIT Colorado to set up our HQ there and have been approved of funds for the same as well. Would love to check up on the type of visa we need to get for incorporating our company. Well, I'll take the first part of that. It depends really what you want to do as to the type of visa that you need. If you really rawly just want to set up the HQ and you have no interest in operating a business in the United States for the very long term, then there are the L1 and increasingly popular E2 visa categories, which will enable you to do that very quickly. However, for all the reasons that we've talked about, if you're thinking much longer term about a future in America, then a green card strategy. There are some other ones in EB-5. To me, EB-5 Regional Center is the most secure, but there are some other green card strategies to think about. So I think that's the way I would answer that question. If the gentleman concerned wants to have a dialogue, I'm certainly happy to give him more sort of direct advice. But, there's a lot of answers to that question depending on what direction he's going in, depending on the kind of business. There are actually some special grants in that state that that can expedite things, but it just depends. I mean, there's just not enough information to comment on that. Right, next question. Do you have any comments on that, Matthew? Or
no, really your wheelhouse, Mark. I have nothing to add to that.
Okay. What is the total funds we are looking at, including the 900,000 investment?
Yeah, that's a good question. So, first of all, I want to be clear in that $900,000 investment is the actual investment that goes into the new business that has to be made available to create those jobs. So the full $900,000 has to go in there. But a lot of times regional centers will have a fee on top of that $900,000 that covers some of the upfront expenses and costs of that particular offering. And so a lot of times you'll see that fee range from $70,000 to $100,000. I think there's a lot of flexibility in that fee in certain situations. So I'm just kind of giving you a general of what I think is out there in the industry right now. And then also you are looking at attorney fees, and every attorney, depending on their quality, how much time they're going to put in, who's working on it, they're going to have varying fees. Mark, I can let you speak to your fees, but I think all in, you are probably approaching that $1 million figure for the investment when you're looking at the investment that has to go in and then fees on top of it.
Right. But lawyer fees are not $1 million, by the way. I don't think that's what Matt meant. If you want to pay me $1 million, won't complain. But usually lawyers' fees are not $1 million. So there's a lady who, or a gentleman who left Infosys and is asking about their case being stuck with NBC. That's very, very case specific, and I can't answer that question without knowing a lot more about the case. So if you want to reach out to us, we're happy to schedule a free consultation because you're a Thai member about that set of circumstances and talk it through. But really, giving any response to that question is irresponsible because the answers to that are so myriad and complex, depending on the kind of green card that was applied for, how it was applied for, and different factors. So if that person would like to reach out to us, then I'm happy to spend some time on the phone going through it. Let's see. So that, I think that's sort of getting towards it. We're getting towards the hour, Matt. Is there anything else you'd like to sort of talk about or comment on?
No, I think this has been great. And, I hope it's kind of laid out the program for a lot of people that are kind of trying to better understand it and understand why you would want to do this. I know the title of the webinar is kind of that H-1B to EB-5, and I think it's important for people to understand, and I know we've touched on it a couple of times, that there are different types of visa categories in the United States. Not all of them are permanent. And I think if you're looking for that most straightforward solution to being able to remain in the United States on a permanent long-term basis, EB-5 is for you. Last thing I would say is, as I mentioned, we have a window right now through June 30th. I do think that the future is bright for EB-5. I think we'll eventually see reauthorization of the program. I don't think we'll see many drastic changes to the program. I think what's been proposed right now is just adding integrity measures to the program that I think are good for all involved in the process. I think it will create a safer, more responsible EB-5 program. So what I would tell you is that, we're always going to have projects available. We have 2 partnerships on the market right now that are very strong investment opportunities. One is pre-approved and is still under construction. And they're both with the developer that I mentioned. They're very strong opportunities. And regardless of what changes in the industry, we're going to be prepared for it. We always have been, we always will. And so if we see fluctuation in the investment amount, we'll adapt. If we see fluctuation in the areas that qualify for the projects, we'll find other projects. And we have a great team in place to help you navigate any challenges that you might face. And we have a simple motto. We put our clients first in everything that we do, because we know that their success is our success. And so we look forward to the opportunity to work with you.
So, Matt, it looks like next time on this regular series, we're talking about H-1B to EB-5. So if anyone wants to talk about how to turn your H-1B into a green card using the EB-5 pathway, please tune in for our next intersession with Ty and Matt, and, have your questions ready. And we will go through how that works and some of the current issues, and be very open to your questions as well. And then also, as I mentioned, we'll do a flashing light special on this $500 1%. Let's call it the 1% potential, just so that just to reconfirm what it is, and if you want to be ready, just in case the 1% possibility comes up, what you can do about it. So Sakanya has posted our contact information, or you can contact Ty. You can contact Matt, and we can invite you. That seminar I don't think will be offered through Ty, but certainly the one on H-1B to EB-5 will be. So great. So, well, thank you very much to Ty. It's wonderful to work with you as always, and thank you to Matt. And the only question I have about CMB actually is that backdrop. If that's one of your projects, there's not very much construction, because the first time I saw Matt a year ago, those buildings were in the same state of construction. So I don't know what's going on with that one.
These are actually our competitors' projects. They're just
Gotcha. That's good. Makes sense then. Thank you, everybody, and we look forward to seeing you again soon. Take care. Bye-bye.
Great. Thank you all.